Are you simply tired of blowing up your trading account? One time after another, whether it is a prop firm or your own funded capital, meaning your own personal brokerage account. All right. Maybe you're simply just over trading. Maybe you're spending too much time in the markets. Leave me a comment down below. I like to hear from individuals just to kind of get a broad idea of how much time are you spending in the markets. Are you spending 30 minutes, an hour, 2 hours, 5 hours, 6 hours? How much time are you actually engaged trading? The more time you spend within the markets and trading, you are actually going to end up losing your profits that you made on the day. That's why I always talk about making 1 to 2 quality setups. Now, today I want to share with you a 3-strike rule that's going to help you build your account and at the same time, be profitable week to week. Okay, so stay with me to the end of this video. This is going to be something that's going to help you stop over trading and eliminate the amount of time you spend within the markets. You have a goal of making money, correct? So you're going to want to watch this video as I share with you these 3 simple things, these 3 rules that are going to help improve your overall trading. Now, I have a specific strategy surrounding supply and demand that you hear me talk about in lots of videos. And if you're part or want to become part of our elite or ultra elite supporter group, guys, that's where I go into great detail surrounding the blueprint, the cornerstone to how I actually trade using a very simplified approach to trading the future markets. Okay. If you're interested, there is a link down in the description portion of the video. Scroll down. It's titled the Elite and Ultra Supporter Membership Program. Very inexpensive. Why go somewhere and pay hundreds or even possibly thousands of dollars in something that you may never grasp? I break things down as simple as possible so that you can grasp and understand, hopefully. Okay, now I can't make any guarantees to everyone out there or anyone out there because your psychology, your behaviors, meaning the trading habits of how you actually trade or what you may have learned in the past, there could be things that may hold you behind. But like myself, I traded and started with a clean slate. I don't want to talk about that too much and go into great detail, but you have to understand one thing. This strategy is very simple. And if you're interested in understanding and learning it, please, you can do yourself the simple favor of going into the description, click on the Elite or the Ultra Elite Supporter link there, and you'll see a few options pop up to where you can basically understand and grasp this simple strategy for pennies on the dollar a day. $6.99, break that down, 23 to 24 cents on the day is all it is. Okay, there's so much value content within that membership program that you can become part of. Now, let's talk about this right quick. The 3-strike rule. What does it consist of? So it's very simple. Let's talk about it. What you hear me discuss a lot of time and what's very important when it comes to trading is, first, structure of the market. Figure out which way the market is moving, okay? Now, that's not part of the 3-strike rule, but that is the most important thing when you sit down in front of these charts. You've got to form a bias, all right? That's going to help you understand, should I go long? Should I go short? Is the market moving sideways? Because it can only move 3 ways, okay? Now, as long as we are in a bullish movement to the upside, the number 1 strike rule, okay, that helps me to basically decide if I'm going to basically, when I'm looking at things and basically weighing my options is, do we have an actual break of structure? Preferably, one of the best type setups is where we have a major break of structure. If I do not have that, that is strike rule number 1, okay? But for example, let's say a trade I took yesterday. This was a break above an area or a major high right here. If the market is swinging and breaking out either above or below a major high or breaking below a major low, those are going to be 2 things you really want to pay close attention to. Those are the type of setups that actually work the best. Now, I'm not saying a simple break of structure cannot work, but where the market is breaking above a major swing high or a major swing low, that is going to be my first rule of thumb because I know those are going to be and carry the most weight in the highest probability setups that I want to look for, okay? So, for example, here, I'm going to show you. The market broke above this major high here, okay? Right there. It broke above. We got aggressive buying to the upside. Okay. If I do not have that, Lots of times I would just stay, away and not trade. Okay, I prefer to see a major break or of a high or low. And as a beginner trader, I'm really telling you this because this is what's going to help you really transform and turn your trading around, because you could trade where there are minor breaks in structure, like right here. This is a low, lower high, lower low, lower high, lower low. This is a minor area structure, minor area structure, minor area structure. You could trade these areas of structure once the market breaks above them. But if you really think about it, if the market is swinging lower to the downside, how do we know that this low right here, that the market may not kind of make some structure back to the upside and then break below that low right there? We don't know that. That's why it's very important and imperative to wait for a major shift to where it's breaking above a high or major low here. Once you have that, it's almost, probably about a 90% chance or greater that if the market comes back and taps a high probability demand zone, in this example right here, after breaking a major high, that the market's going to continue moving in that direction. So that is, rule number one. If we don't have a major break structure, a high or low, and the market, where it breaks above, then that's going to be the first strike rule of that 3-strike rule process or steps. Okay, so that's one thing right there. All right, so move on to the second strike rule, meaning if this doesn't happen, it just kind of starts to unfold that I should not be looking for opportunities to trade. Okay, so let's just say right here, all right, that this is a major high. It breaks it. It comes back to the zone here, but this is a low probability zone right here. Okay, I got to weigh my options. Low probability zones are ones that can kind of 50-50 work, 50-50 not. Okay, so most times I'm going to rule them out. So that's going to be strike rule number 2, because we have a low probability setup. I talk about the difference of what makes a high probability versus a low probability setup. It's always surrounding that fair value gap, the imbalance, the gap back at the zone. You hear me talk about that in a lot of videos. If you do not know what I'm talking about full on in, then go to the channel, and on my homepage you can type in, using the search tool, the little magnifying glass, type in imbalance or gaps, and there's video content on the channel to where you can watch to kind of get an understanding of what I mean. But in this case here, this is a high probability setup, so that's what makes up the difference. All right, if I do not have a gap or a fair value gap or imbalance resting back at a demand or supply zone, strike rule number 2. Okay, I've got to have these. I've got to have a major breaker structure, a gap resting back at the zone, because we want to start weighing things. It's like, okay, I have one thing works, 2 things coming together, and if that third thing comes together, then that helps me signify that this is a great trade opportunity on my charts. All right, so we're going to move on now to talk about that third strike rule. If this happens, then it's a no-go at all. So if the market retraces back to the zone, okay, we got a high probability situation here. What if it comes down and it breaks below the zone? If it breaks below a high probability zone, it is a no-go. All right, that is the third strike rule. Okay, so you want to follow these examples as far as in reference to see these things unfold. High probability setup, break a major area structure, high probability demand zone there with the gap, taps the zone here, and then it closes and starts to move back to the upside. If we're in violation of any part of this process here, then I'm not 9 times out of 10 going to look for an opportunity to trade. I am being more pickier now and patient about the trades that I actually take, because everything has to come together like glue, and it has to be bonded. It has to be a strong enough setup for me to actually take, which this was right here. This is a beautiful setup right here. Beautiful, beautiful example of a setup. Now, if let's say we have 2 of the 3 that actually work out. Let's say this wasn't a major breaker structure right here, but we did have a demand zone right here, and it was a high probability setup, and the market comes back to it, like right here. There was a breaker structure. This was not a major breaker structure, but still a breaker structure to the upside. What if the market came back to this zone right here, and it's a high probability setup and taps it? Would I take that trade? I would be very interested in that trade, but this is where I would move down to my lower chart to start to see if we start to basically imprint market structure shifts back to the upside, making higher highs and higher lows, and look for a demand setup off my lower range bar chart, or whatever your chart may be from a higher time frame, to look to trade in the same direction as going long. Okay, yes, number 1 strike rule, we didn't have that a major breaker structure, but we do have a breaker structure, and if it comes back to the zone and we have where it works out to be a high probability setup, right? And we don't break through this zone here, and the zone holds, and then we get a market structure shift on the lower chart, okay, because this is a higher chart, then I will look to take opportunity to go long, like right here. This happened to the overnight session. This isn't a major breaker structure, but it did come back. It tapped the zone here, okay? It's a high probability demand setup, all right? And it didn't break through the zone, so it held. But we have to always pay close attention to price action as the market is retracing back to the zone, because the market did make a low, a lower high, and break structure coming to the downside here. And when it tapped this demand zone, there was a supply area right above. That's why I tell people all the time, even when the market's retracing to your zone, pay attention to price action as it's retracing to the zone, because this doesn't guarantee that it's going to come up here and take this high out. This is a resistance area and a supply zone, but there could be still opportunity to scalp this, because we do have a breaker structure, we do have a high probability zone, and it never violated the actual zone there to where it broke below that area structure. Okay, this is the 3-strike rule that I apply to my own personal trading, and this will help you, basically look for great trade setups and keep you out of situations to where you just, you're taking every little setup, a thing that looks to be, good and enticing. This will stop you from over trading and blowing up your actual account. Again, if you want to dive more in detail about the strategy and the setups that I actually take, you may want to become, I'm saying this for a reason, because there's a lot of valuable information surrounding and becoming an elite or an ultra elite supporter. The link is down in the description portion of the video. Once you click on that, wait about 1 to 2 seconds. You're going to see to the left hand side 3 tiers pop up. You're going to want to choose either the elite or the ultra elite tier. Okay, click on it and it's going to show you the perks and rewards that you receive for each tier. Example, to become an elite supporter of the channel, you receive all my trade breakdown videos. This is where I post my trades over on the Discord, right? And then I go back and I break them down for you guys who are elite and ultra elite supporters. Why? Because it provides you the information. It provides you the insight. It lets you know in great detail about the strategy, my mindset, and what I was thinking from top-down analysis, market structure, price action, talking about where to place your stop loss, where to place your profit targets, running you through each one of those setups is like it's like being in front of the instructor in a sense, and kind of watching things unfold on the chalkboard, okay? All right, or on the whiteboard. I'm breaking things down to you in an elementary standpoint, like, why did I take that trade? So you understand the strategy, so you understand each one of those trades, so that when you're back testing yourself, the strategy as a whole, to see if it's going to work for you, that you can find these same type setups, okay? But I give you and talk to you, a rule set or a rule base of things to actually look for, okay? When taking these type setups, there's tons of those videos there for anyone who wants to become part of the elite or the ultra elite supporter program, okay? Become a member there. You also receive my video playlist. You also receive a great detailed video surrounding market structure. And for all those who also want to become or take one step up and become an ultra elite supporter, you receive as well the live recorded trading session videos, to where I record my trading sessions. I post them for you to watch in full length. So you can basically see me engage in trades, from a live session, and I explain to you in great detail why I took those trades as well as talk about profit target areas, where to take out once you're into a trade, and where to place your stop loss as well, and market structure, price action. Again, we go through those things, okay? The link is down in the description portion of the video. You can join the Discord as well. There's a link down below, so click on that too. Now, I want to thank everyone for spending the time watching this video from the beginning to the actual end. If you have not taken the time to subscribe to the channel already, please do so by clicking that sub button down below. Make sure to click your post notification bell so that you do not miss one of the videos that I post, because I pretty much post on a daily basis. And outside of that, if you found some value in the video today, okay, please make sure to drop me a like by clicking that thumbs up button. I hope everyone had a successful trading day, and I'll see you in the next video.